Hourly, moving through the mid-afternoon session on Wall Street, and you can feel the market starting to pivot from today's grind to tomorrow's risk. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to keep clarity through the chaos in this hour of trade. What's changed since our last update is the focus around the upcoming November jobs report. According to Jeffrey Bartash at MarketWatch, this one is expected to be messy and not especially easy to interpret. Economists are bracing for a combined release that has a lot of statistical noise, so the key question won't be a single headline number. The real focus is whether the report points to a sharp deterioration in an already fragile labor market, or whether things are stabilizing at a weaker, but steady, pace. That distinction is going to matter for rate expectations, for the Fed's reaction function, and for anything tied to employment. Think consumer spending, housing, and small caps. Overlaying that, you've got a broader macro narrative that Quentin Futrell calls silent pain for consumers heading into 2026. His latest piece points to tariffs, the AI boom, geopolitical division, and a new administration all combining to make 2025 a uniquely unsettling year. Even if markets are near highs, affordability remains a sticking point. That backdrop keeps a lid on how far investors are willing to stretch for high multiple consumer stories, and it keeps defensive and quality factors in the conversation. On the opportunity side, there's still a bid for anything tied to real assets and balance sheet strength. Futrell's separate story about a family whose children have effectively paid off the mortgage on the parents' investment properties, yet are being told they should still buy them out, highlights just how much wealth and leverage is wrapped up in it. Housing and rentals. It doesn't move a ticker today, but it's part of the broader theme. Property, family capital, and intergenerational transfers are front and center as people navigate a choppy economic backdrop. Tech is where the real stress and nuance are showing up this afternoon. Emily Berry reports that ServiceNow is sinking toward its worst day in nearly a year, on fears the company could get more acquisitive to reignite growth. When investors hear acquisitive, they immediately ask, will this dilute margins, raise execution risk, or signal that organic growth is slowing? That's why you're seeing pressure there. This is an area to handle with care until management strategy looks clearer. At the same time, Christine G's work on AI is still echoing across the tape. On one side, you've got that piece about AI crushing once reliable tech names like FactSet and Gartner. Classic, sticky businesses that suddenly look unloved as capital chases the hotter AI stories. On the other side, her reporting on Oracle shows how both the stock and its bonds are struggling to shake off worries about how the company is financing its AI push. Those are the sleepers I'm watching. Legacy tech and enterprise players that sit right at the intersection of AI promise and balance sheet reality. They're not meme names, but they could be important tells for how sustainable this AI spending boom really is. And then there's Tesla, still a symbol of the optimistic end of that spectrum. William Gavin notes the stock has been flirting with highs on the back of a bold call for a potential $3 trillion valuation, supported by AI and autonomous driving hopes. The fact that shares have already paired some gains tells you the market is enthusiastic, but not blindly so. Positioning there remains a tug-of-war between believers and skeptics. Into the next hour, I'll be watching three things: how futures and rate-sensitive sectors begin to price that messy jobs report, whether the sell-off in ServiceNow bleeds into broader software and high-multiple tech, and how those AI-adjacent legacy names like Oracle and the FactSet Gartner complex trade as investors reassess where real durable cash flows sit inside this AI landscape. All of that will set the tone as we head toward the closing bell wrap later today. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,